Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of cryptocurrency tax evasion, how amnesty works, and what's going on as of lately. So with the surge in cryptocurrency, Bitcoin up to 50, 60,000, it's becoming a much more popular investment. One of the problems with that, of course, is that it's not backed by the U.S. government. It's not considered currency per se, and so the government can't really control it the way that they want. I mean, chances are they'll find a way to regulate it, but they don't get the chance to control it the same way that they do our regular currency. A lot of people may find themselves in a tax evasion type of situation in which they never intended to do so. From a baseline perspective, just purchasing cryptocurrency is not going to be a taxable event, right? If you buy a house or you buy an investment property, let's say, you buy it for $400,000, right? That's not a taxable event. Now, if you sell it or you exchange it, then you may have a taxable event. Same with cryptocurrency. Now, you generally don't get the 1031 exchange for cryptocurrency, and when you've got non-crypto, you've got things like 1031 and boot for any additional difference in basis and cash. But for the most part, with cryptocurrency, it's going to be taxable when it's exchanged, okay, when it's sold, and if it's being received, for example, payment or other reason. Here's an example. You work for somebody, instead of paying you in cash, check, they pay you in cryptocurrency. That's perfectly valid. Now, you still have to do all the employment tax and things like that you would do for regular currency, but there's nothing inherently wrong about that. Same with if it's if you receive it as payment, totally fine. But you have to abide by that same category of income that it would be. Just because it's crypto, in other words, doesn't mean that you get a free pass. When it comes to reporting cryptocurrency, it's on the 2020 tax return, the 1040 on the front page. So, the IRS wants to know if you've had any acquisition, sales, or other transactions involving cryptocurrency. As to the reporting of offshore cryptocurrency, while there's no set rules in place yet, there was a FinCEN notice, I believe it was notice 2020-2, a few months back, that said, hey, the goal of FinCEN, their objective, is that they're going to require reporting the same way that they require for foreign bank and financial accounts, which follows a notice that came before that, which basically says, or regulations actually, where they're requiring banks and other institutions to report transactions similar to cash. So suspicious activity reporting, SARs, CTRs, things of that nature. Now, if you don't report, then you may be subject to fines and penalties. Just not reporting is not in and of itself going to be tax evasion, right? Here's an example. You didn't know you had to report it. You had it on a financial exchange. Maybe you moved it into a hybrid account that had both fiat and crypto, and it should have been reported. Or you weren't aware that maybe the regulations had changed or whatnot. From that perspective, that's not knowingly. It's probably not even reckless or willful blindness, right? But if you start knowingly not reporting when you're supposed to, reporting transactions, reporting income, not paying tax on there, then that could be considered criminal tax evasion. If you're artificially reducing your tax liability, hiding income, anything else that you could try to do to avoid paying tax on that income, then you could be subject to some significant fines and penalties, and that could include special agent investigation or criminal indictment. So you definitely want to be careful with that. If you've got some undisclosed cryptocurrency, you may consider getting into compliance before the IRS reaches out to you. There's various amnesty offshore programs available to you depending on the facts and circumstances of your situation. There's VDP if you're willful, streamlined if you're not, delinquency procedures and reasonable cause. One very important thing to keep in mind is with voluntary disclosure, VDP, you are willful essentially, right? Under the new version of the program, well, taking a step back, there was OVDP, which was an offshoot of VDP, which is the traditional voluntary disclosure program. With OVDP, you didn't have to be willful. Plenty of people who were non-willful did OVDP because essentially you got a closing letter and you could avoid an audit. Under the new version of the program, which was modified at the end of 2018, early 2019, you can do the program, but you generally do it when you're willful. or you can't certify under penalty of perjury that you're non-willful. The point is, if you're willful, the IRS has a program in place for you to get into compliance. It doesn't mean that you have to continue any potential evasion that you might have been doing, thinking that there was nothing you could do because everyone keeps telling you can't do the streamlined program if you're willful. That's true, but there's other programs available. If you've got questions, we have lots of information available on our main website, goldinglawyers.com. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.